Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, and you can do so simply by visiting our website www.dailymarketmovements.com. I'm going to leave the website link below this video in the description, so if you are interested in joining our signal team, and all you have to do is scroll down, click on that website link, which will then direct you to our website, and you'll see that we charge a very small fee of $199 for a year's membership, so great value for money. Well then, in front of me we have the S&P 500 futures chart, and I've had so many of you contact me privately saying, Max, please can you do a video on the S&P 500, and I finally decided to do so. So this will be happening every single day now in the from today onwards. So as you can see on the S&P 500 today, we've had a bearish day, currently trading at around 3,023. I think we've just had some profit taken. I was just explaining over in my Nasdaq 100 video that June is actually coming to an end. Monday and Tuesday will be the last days of the month, and also that means that we are in the last couple of days of the second quarter of 2020. So, this last quarter, hedge funds since March have been buying, and as you can see, the market has moved up a huge amount. So I think the reason that we're seeing some down pressure in today's US session is due to the fact these managed money firms such as hedge funds and banks are just taking some profit off the table, making their portfolios look really nice for their investors. And looking healthy, because this has been one of the best and strongest quarters I think since the 1900s. So it's just incredible. Also, we have that there will be many money managing firms which will be adjusting people's pensions investments. So, for example, their 401ks, they will be those who are approaching the retirement age, they will just be basically diversifying their portfolio a little bit more and doing some reallocations of their assets, so taking money out of equities and investing them into bonds. So that's why we're just seeing some down pressure in today's trading. But however, I see this as a buying opportunity. Why? Well, because we recently had the cross of the 50-day EMA, cross above the 200-day EMA. As you can see here, that blue cross is there, and that's generally a very bullish sign. It sets a trend for a long-term bullish movement. Also, when I look at this market, it looks like we're trading now in between 3,200 and the $3,000 level. Also, I want to highlight that we have got some support down at around 2,800. We've got a lot of noise. If I just get my brush here, there you go. We got a lot of noise there, so there should be plenty of support, even if we did break down below the 250-day EMA, which would offer plenty of support, of course. But going into Monday, I am a buyer. I've just bought this dip on the S&P 500, and I have actually two long positions open on the S&P 500. My first take profit is at 3,100 and my second is at 3,200. So going into next week, we might see some downwards pressure going into Monday and Tuesday, as it is the last couple of days of the second quarter and of the month. And as I mentioned before, some managed money firms will be taking some profit off the table. But going into Wednesday, Thursday and Friday next week, I am expecting to see some upwards pressure with these managed money firms coming back into the market and putting their spare cash back to work. You have the banking stocks that have declined roughly around 5% today, which will these managed money firms who are willing to put money to work for a long period of time. Their long-term investors will be I believe will be likely to buy some of these big stocks at such cheap prices. JP Morgan's still trading under $100 a share, so there's just plenty of great value in some of these stocks as well. We also have the airline stocks, which are very low. The likes of Southwest has dropped down near to $32. Southwest has a great balance sheet, so there's still a lot of value in these shares if you look at the long-term picture. The only threats towards the S&P 500, there are a few, of course, from a fundamental perspective. We have the China tensions between US and China. We also have the rising coronavirus cases, which is putting pressure on the markets. But the reason that I'm still bullish on the S&P 500 and US stocks in general is because I don't think that we're going to see a lockdown as we did back in March. We're never going to see the whole country have a massive lockdown again. I understand, and I can see that in Florida, for example, in Texas, some of these states are seeing a huge amount of coronavirus cases. But from this point onwards, these states are just going to lock down by themselves. The whole country as a whole will not lock down as it did back in March. So I am bullish on the stock market, and I do expect the S&P 500 to be trading back towards that $3,200 level, which is the 3-month high. And then if we can break above 3,200, we will then likely go and target the all-time high up at 3,400. But I think that comes towards the end of the year, or potentially even the beginning of next year. That just depends on earnings and the reopening of the US economy. With regards to the RSI, on the daily chart, we're currently at 47. So we're bang on in the middle. We're nowhere near considered to be overbought, and we're nowhere near to be considered oversold. So the market could move in either direction with plenty of momentum. But as I mentioned, going into next week on Monday, I have bought this market. My short-term target is at 3,100, and my longer-term target is at 3,200, with my stop loss just below the 250-day EMA at around 2,900. So I have a nice 2-to-1 win-loss